All righty. Good morning, everybody. Welcome to the Hurley Investments Trade Findings and Adjustments. It's good to see you guys here. I'm going to get right into it. June 15th. Last time I spoke was June 8th. We went over the upcoming rate decision, which was now yesterday on the 14th. Discussed what would happen there and the likelihood and what we thought would happen and what everybody kind of expected is what ended up happening. We had a rate hike pause this time around. So there's not a rate hike, in other words. You can say that in a more simpler way, I guess. But they said they expected to still have two hikes sometime this year. So currently the market is judging all of that favorably. We had a run in to the rate decision in our stock market, run up, I guess, on expectation that they would pause rate hikes. What wasn't exactly clear is if they were, I guess, what they were going to say about the future. It was definitely expected that this wouldn't be a stop in rate hikes, just a pause this decision with more probably to come, and that's exactly what the Fed ended up saying. A couple more to come, but the way that the market has taken this is we're getting really close to completing. The Fed is getting really close, rather, to completing their rate hiking cycle. And a couple more this year. People are thinking that maybe next year they're really going to be done. And we were a little worried, of course, that the market would decide that the Fed should have stopped now and, had no more rate hikes and started. We thought the market might perceive that negatively and start heading down today, but today is a good bounce. It's been perceived positively. Everybody's thinking that the Fed is close to being done raising rates. So first time in a while we've gotten overbought on our RSI in our S&P chart, kind of pulling out. Oh man, was overbought August of 2022. We had that huge big run over June, July, August to mid-August before the fall down to the low. Let's see, overbought November 21. So quite a gap between these periods. So what do you guys think? Are we heading back up to 5,600? We're heading back up to, excuse me, 4,600, or are we heading back up to 4,800? We've passed the 4,300, this top over here. I hope you guys can see what I'm talking about. Now hit 44. Technically, I don't see a lot in the way until we get to 46. I don't have tons of confidence we'll get up to 48. We're still kind of dealing with some issues. Still kind of dealing with companies sorting their way through higher rate environments. Um, but what do you guys think? Jeff said we should have a break before going higher. Okay, what makes you say that, Jeff? Jeffrey's saying, hey, we're overbought. We've kind of come up to a 4,400 level, round number. We might kind of cool off a little bit before continuing up. Jeff says yes. So I can buy that. But right now, what we're seeing is a breakout trend to the upside. Big up January, really crappy February and March. Mid-March started to come back. April and May were completely sideways. Towards the end of May, trying to fight to get up higher, and then as soon as June comes around, it's really starting to take off. No worries, Jeff. Um, so this makes me kind of want to underscore, and I'll take this down. How important it is to follow the trend. Follow the trend no matter what kind of worries you might have out there in the future. Believe the market when it's telling you what it's doing. Of course, we talked a bit about last time, at what might continue to happen or what might the market look to next after this rate hike pause. And of course, we've still got the economic indicators. Got to redo this one. June 19th and 20th. We've still got our CPI numbers. Those came in. Interesting. It's all not available. That's because that's next week. Sorry, sort of digressing here. Trying to get these to pop up here. CPI was in line. PPI was down. Core PPI was slightly up. But we're just seeing some decline in, excuse me, inflation a little bit. So to finish my point here, some things that the market's obviously looking at and going to look at here is employment and inflation numbers, how those continue to play out. If they continue to play out favorably, according to the Fed, then we'll continue to see some good uptrend. If there's something that kind of throws a stick in the road, then obviously things might change. And to Jeff's point, right now, certainly we could get some technical pullbacks that help us to continue to go higher, but that is all part of a bullish trend. Taking a look back here again, this is the 3-4 year chart, so we can see how things have gone since 2020. You kind of see the market hit these tops. You see the trend from these tops up here, 4,800, 46, 43. Where is the long-term trend starting in 2022? In spite of this crazy bounce back in the summer of 22, which of course brought this huge fall in September, October, to the bottom of October. We have lower highs, lower lows through that year. Since the bottom of October, again, pointed this out a couple times, starting to make higher highs and higher lows. Bit of a struggle last month, but here we are, higher high. And I pointed out these two parts. Let me try and do this a little more clear. Technical crossover of our 50 and 200 day to the negative back in 2022. And since this year, even though we had a terrible February and March, technical crossovers to the upside, big bullish indicator, and conversely 50 going under the 200, big bearish indicator. So with all of this in mind, what do we do? Jeff asked, do you trail your stops on stocks you're in? We don't trade stocks. We invest in stocks. We trade options to protect our shares. Not a bad idea if you are doing the stock trading thing, but typically what we're doing is we're buying and holding and protecting shares of stock. If it falls, adding shares with cashing in our put protection. Sometimes we'll buy calls, leap long calls to enhance our bullish trends. Jeff asked, I'm up big in Apple, AMD, Amazon, INTC, Cisco, Ford. I'm leaning to sell everything until market's correct. Question mark. So you're kind of asking me. Jeff, I would consider I wouldn't be selling just because you're waiting for a correction. I would be selling to book a profit. I don't know when a correction is going to come, so that kind of has to be your decision, obviously. As far as the stocks you have there, let's see, Amazon, I wouldn't be holding. Amazon is just very expensive. Intel, Cisco, I wouldn't be holding those. I'd hold Apple and Ford. AMD, geez, let me see. Give me a second. With how good Nvidia did, it's hard to say it would be smart to sell off AMD all of a sudden. PE is 528. That's a very expensive stock. Ford P is 30. That's a huge difference. What that tells me is AMD is very overvalued and their future earnings don't look like they're prepared to keep up with their past. Let's look at Nvidia. So it's obviously getting a windfall there from Nvidia. Price to earnings is cheaper. Forward PE is higher. But it's also $429. I think you could safely argue that you've had a nice run in AMD and you could take a profit. But it takes it out of this app site. It takes so much processing power. Yeah, I don't know. I don't know if they're necessarily bubbles, Jeff. They're just some stocks just trade at a ridiculous premium, and so if anything does go wrong, they just get screwed. They 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 fall big. And Nvidia and AMD have fallen quite big in the past year, couple of years. So not a bad idea to take a profit. However, kind of my point here, Jeff, is you're kind of worried about what might happen in the future, which is it's okay, but right now, again, the trend is telling us that the market is going up. So why not follow the market trend? And I do agree you could have a pullback here. There's always going to be pullbacks in bullish markets, bullish trends. That just helps kind of consolidate things and give everybody an opportunity to start buying that little dip and continue up. But you really don't have to sell anything. I would not be selling Apple. I wouldn't be selling Ford until it gets back up to what, 15 or 20. Where did Ford get to? I always forget. Yeah, they got up to 24. What I'm going to be looking to do this week is to get protection off of stocks that justify doing so. We've got the market trend helping us. Definitely helps us have a little more confidence taking protection off through when we had them on for our rate decision. Baidu was going up and we just, well, let's actually look at Meta first. Meta on a ridiculous trend that just keeps going up. We took Meta puts off this morning, had 265s just to get us a little protection through the rate decision. So we got a nice portion of that premium back. Baidu, we had left 125s on. So those were way out of the money. By the time everything transferred over for us, as you guys know, we had to transfer to a different broker. Baidu was already looking really nice and heading up, touching 150 this morning. But those ones we ran out of the money, decided not to roll them up. We're just kind of at this point where we're starting to see that we can justify allowing stocks to run a little more often. Doesn't mean we're not going to have a pullback next week because this is quite a ridiculous run up. But again, going back to our trend is heading up. Jeff said, I think the market is hard emotional. It's hard to buy the low and it's hard to stay in to the top. Well, again, going back to our top is 4,800. So we got a ways. Definitely keeping an eye on economic news, that kind of stuff. Keeping an eye on following these technical trends. But we're not really at the market top. Jeff said, I'm bad at timing when to buy or sell puts. How do you deal with this? I would say focus less on timing when to buy and sell puts. Now, let me tell you what I mean by that in just a second, if I can get this. Word to cooperate. And where timing is less important because it's so unpredictable. You have to have a reason to be protecting. What is your reason for protecting? You can't predict the best timing. Sometimes you can land a good timing. That's just kind of luck. Intraday, you've got the market is ridiculous in the morning and it just kind of doesn't give you good information as there's all sorts of E-mini futures and all sorts of other stuff getting filled in, getting settled in the morning from the previous day. It's just a kind of a crap time to be trading. So typically try to avoid doing things in the morning. Typically you'll have a lull during the East Coast lunchtime. So if you're looking at getting rid of puts for a better price, you might look towards the East Coast lunchtime period because chances are the market is a little lower at that time. Not always, but that's kind of how things go. But, that's not giving you a great idea, what day or when to take off puts or sell or buy puts. You're really just focused on what are you protecting for. So I'll say trying to time the best time to add or take off puts isn't focused. It is, I'll say the focus is to find the right, I'll say find the best reason to take off or add puts. Reasons, earnings, rate hike, technical analysis. Knew there was a Y in there. I use indicators with your reason when buying puts or selling puts. Jeff asked. So are you talking about technical indicators? I assume that's what you're talking about, Jeff. So I got a couple things. Obviously, our 50 and 200 day. All we're doing with technical indicators or charts is trying to see where what's the word? We're trying to see groupthink. We're trying to see where a lot of people, a lot of investors, or big investors, institutional investors, where they have their buy orders, where they have their sell orders stacked up. We're trying to find resistance, support. Hope you're kind of seeing where I'm pointing to here. 160 for Baidu, 116, 117 support. 50-day, May 16th, couldn't get over their 50-day. Might have been a good day to protect. Maybe that next day, seeing that it couldn't get over that. Overbought over here. Looking in the past to see how often, how does it trade when it's overbought on our RSI. Might have been a good point to say, hey, we need to add some protection, some level of protection. Hey, we're getting close to that overbought point. Hey, it hit a 150, came back down. Understanding the current news, current, I guess, feeling of the stock, which is a little more positive right now for Baidu. Back here, much more sporadic. Economic Chinese news and all that kind of stuff. Chinese weather balloons, political stuff was happening. Not necessarily happening right now. I don't know. I'm just kind of trying to throw out little things that we're looking at. You got to take things in context of what is happening currently. You got to look at crossovers. We are on a bullish crossover. This is the 5 and 20-day exponential moving average. You can see them over here. But these give us crossovers. Sometimes there's these months where it just goes back and forth and it's really not a great help. And it's kind of going sideways in this ridiculously big trading range. 155 to 130. It's ridiculous. But we get a big crossover here. We get a crossover here. Some kind of back and forth. But looking back a little bit, you can see that technically their crossover here from the 50 point on the RSI to the positive side. We've got a crossover on our MACD to the positive side, kind of more back here. It's kind of a bounce off there, but those three indicators, they give us a good idea of technically bullish or technically bearish. But I spend a lot more time with the 50 simple moving average and 200-day simple moving average just to get an idea for support and resistance levels. Big, in my mind, big bullish indicator to see this pop above the 50-day for Baidu. Nice to see it above the pivot point. Pivot points are a little less, I guess, much less important. Does that give you a bit of an idea of what I'm looking at? Looks like you got it. All right, cool, Jeff. Those are some things I'm looking at, but really you got to take that into also the context of the S&P and where it's going, because the market is going to raise all tides, all ships. Tide raises all ships, rather. So that's our context as well. Jeff asked, do you experience emotions trading and investing? How do you deal with them? Yes. If you don't, you're naive or ignorant or a sociopath or just stupid. Everybody deals with emotions. But again, the way I deal with it is just what I told you. I'm trying to focus on my reasons. I have to have a reason. I have to justify a reason. It helps me to be able to justify a reason to Kevin, and likewise for him to justify it to me. You don't always have to be right, because sometimes you make decisions and then news changes and then circumstance changes, right? You don't necessarily need to worry about, well, you obviously don't need to worry about predicting the future because you can't, but you need to, what helps me is to focus less on, man, is this decision going to be right or wrong? What is it right now? What is the best decision right now? And if I can make that argument for my best decision, best reason right now, it will work out. Things tend to work out. But I'll be honest, it's difficult. It always is difficult. Emotions are difficult to deal with. It definitely helps to bounce things off of somebody else, so you can weed out whether you're just making an emotional decision or you truly have a good reason for what you're doing. But that's what I would say, is focus on your reason. And one more time, you don't have to be right, you just have to explain why you're doing something. Hopefully that gives you a little bit more help. Sweet. Glad I could be of help, Jeff. Anybody else have questions, thoughts, going longer than I expected today, but that's also good. Not seeing any questions. All right, guys. Thanks for all the thoughts, questions, especially you, Jeff. Great stuff. Glad we could go over some of that. Um, that does it for me. I hope you guys show up Monday night for Kevin's webinar. As usual, have a good weekend and take care.